Okay, everybody, here we are. You, me, whoever else. We are here together to talk about a lot of things. I want to cover today's market action, what we can look forward to, and something else. Load up. And I mean load up, people. Probably in more ways than one. Okay, so it is Tuesday, February 4th, 2020. Let's talk about this market. The Dow Jones Industrial Average put on about 400 points today. New record close for the NASDAQ. However, the Dow Jones Industrial Average was up over 500 points at one time today. Couldn't hold on to those gains. And to me, in my opinion, and this is just me, you can have your own. There are people going nuts all over the place. To me, it's about crude oil. Crude oil could not hold on to gains today. This may weigh on the markets moving forward. Again, they don't move in tandem. You can have divergences here. There's always divergences. To me, with crude under pressure again today, it didn't lose all that much, but a little bit. It's not a great sign here for the stock market. Now, what do we know? What do we absolutely know 100%? First of all, I want you to start using the Federal Reserve's own website, federalreserve.org, or I think that's what it is. Start looking at their repo operations, how much cash they are pumping into this market every single day. It is epic. It's absolutely epic. Not only is the Federal Reserve, and this is about load up, not only is the Federal Reserve involved in the repo scam, helping the Wall Street banks pass cash back and forth to each other overnight to keep the short end of the yield curve pinned down, give the illusion of liquidity in the market, but they're buying the entire yield curve, hence why it's flattening out and dropping, okay? Hundreds upon hundreds of billions, trillions is being pumped into this. China is also embarking on a big stimulus program. Understand what you're looking at, okay? You're not supposed to know this stuff, but this is a phenomenon that central banks around the world are doing. The European Central Bank as well, pumping as much debt as they can into the system, all right? World leaders calling for more debt. World leaders calling for negative rates. None of them explaining to the people, the masses, of how this is going to help them. No, it doesn't help them. All it does is allow the central banks to inflate. And this is why I'm going back to load up. Understanding where we are. Let's talk about some economic news that we got today. Factory orders. Factory activity and manufacturing right here in the United States continues to free fall. But because of some defense contracts today, President Trump was out touting the factories. See, he can't allow you to know, and it's not just him, that the U.S. economy is in free fall. He has to highlight certain things, and that's what he did. Great economic news. Stocks are up 500 points, whatever it was. He on his Twitter feed doesn't mention when stocks fall 600. Will never tell you the true state of the economy. It all has to be, it's the greatest it's ever been. We're nowhere near the president's GDP targets. So what does this mean? The Fed must continue to inflate. The Chinese central bank will continue to inflate. The European Central Bank will continue to inflate. Japan, you can go on and on. So what does this mean? What does it mean in the grand scheme of things? Well, it goes back to my number one rule. My number one rule of all time. Bet against this debt. Become your own central bank. People, it's so simple to do this. You hold hard assets. And yes, cryptocurrencies as well. I own Bitcoin, Litecoin, Bitcoin Cash, Ethereum. I also have a tiny fraction in Steam from my Steam It blog. Yeah, I own these things. I also own gold, silver, my favorite, platinum, and palladium. If we know for a fact that the massive debt inflation cycle that we are in, that we have never seen, is about to get monumentally worse. And I cannot stress that enough. There's no end in sight here. So when you hear the Fed's repo program is temporary, it's not temporary. It's permanent. Not only that, there are members of the Fed right now saying, well, maybe we need a permanent solution to the liquidity problem in the market. You mean they're admitting that there's a liquidity problem despite the fact that there are trillions upon trillions upon trillions of dollars in digital form existing on the earth, and it's not enough? No, it's not enough. It's an incredible situation. This is why the relentless acquisition of debt on a scale that you cannot believe is going to continue and continue and continue and continue. So again, forget about trading the market or investing in it. The best place to be, bar none, longer term, is to be holding hard assets, betting against this debt bubble. It's like nothing that has ever been seen before in the history of the world. And it's something that I outline over and over and over and over and over again. Look, they're going to play their games with crude oil, with the stock market, buying everything in sight, issuing in their final plan. Their solution, the solution of the central banks is what? To be the lenders and buyers of last resort, to issue more of their products so they can control the entire freaking world. Okay? This is not a science fiction movie. This is the truth. Everything is in place right now, and we're watching the end game. So if we know, again, the end game is to inflate like you can't believe. No one can believe. Again, we've never seen what we're seeing now before. Not under President Obama, not under President Bush, or anyone before them combined. We have not seen anything like this before. So in order to keep the illusion of a fake market hyperinflated, how do they do it? They have to hyperinflate the debt. So what does that mean for you and me? Well, goes back to rule number one. Betting against the debt. Become your own central bank. Load up on silver, number one, physical. Number two, gold, platinum, palladium, and yes, crypto freaking currencies. You don't want to hold cryptocurrencies? That's fine too. Then just hold the other ones. It's so simple. It is so easy. All right, look, I know I went off on a little bit of a rant here, but I think it's important to once in a while get our bearings back on target, understanding what we need to do. With regard to this stock market here, people, look, the stock market put on a nice gain today, a new record for the NASDAQ, but I cannot imagine stocks are going to continue to rally if crude continues to fall, unless, again, they issue more debt. And more debt on top of that, and more debt on top of that they can pile on the backbone of the United States of America and every single citizen of the world. Again, the Fed, they have a stranglehold on the world by the dollar being the world reserve currency. They own it. They own it all. And that's their end game, is to own it all. The banks that run the Fed, it should be very simple to see that is their end goal, to create debt slavery on an epic scale, on a global scale. And again, what this is going to amount to in the end is the vast majority of people getting absolutely wiped out. Probably a loss of life on a biblical scale, for many, many reasons here. But this is the end game. Inflate the debt, which will inflate the population. The debt bubble will burst. The population of the world will decrease exponentially. And then we'll have the masters, who the slaves at the bottom are going to have to answer to. It's already here in many ways, but we haven't seen the culling of humanity yet. The culling of humanity is coming, and it's all being born on the back of a deliberately hyper-inflated debt bubble to issue in the final solution. Those two words should sound familiar to some of you out here who have studied history, and I don't use it lightly, but understanding the culling of humanity that is about to happen, or when it does happen, should make you understand why I use that term all the time. Final solution. That is their final solution, and it's a sick thing. So load up on ammo too. All right, look, love you all. I'm out of here. Please share the video. See you tomorrow.